All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Going to recap all four markets today where I believed the best opportunities existed, and I will explain why. We look at four markets: the NASDAQ, the S&P, light sweet crude oil, and gold futures. All futures markets. I am a futures trader. I have a strong passion for the futures market because of how well regulated it is, how the liquidity is, the ability to access order flow, and really have a great understanding. It's as easy to buy long as it is to sell short. It literally clears in your account immediately. There are plenty of funded accounts out there for traders looking to trade with somebody else's money other than their own. So the versatility of the futures market is where I trade, and for all those reasons and many, many more. So let's go one market at a time. We'll start with crude oil. All right, so crude's been on this crazy ride higher, had some sideways crap this morning, right? Where do you want to buy this, right? So I'm looking at higher time frame here, current time frame here, checking out volume, looking for really the sweet spot. And the sweet spot for me is after we kind of form this bottom off the overnight low, is right here, right? We push up to this prior high, we pull back. I don't like that. We push up again into this level. Don't want to trade the level, but we settle above it, and then right here at the retest is where I am interested in buying crude oil, okay? Take profit here, take profit here, take profit here, and, well, we kind of discussed how we ran out of steam here based on liquidity in the market, that we saw that we were having a hard time going higher here. Now, just using purely provided technical levels, the opportunity was to buy here, place your stop underneath this candle, take profit once. There was two levels here, take profit twice. Obviously, get your stop to break even. Yes, through my talking, we kind of, an interpretation of liquidity, we kind of knew we were topping out here. You could see that the buyers, every time they tried to push higher, you could see the buying volume was increasing, but the price was decreasing. So this was really the area where we were starting to form a top. In fact, I drew this support line in this correction, and I told my traders, I said, hey, listen, if we settle below this support line, we're falling back. So the balance of your trade probably should have been closed out somewhere right here around 76, 88, 89. So either way, profit once, profit 2-3 times here, and then still closed out for profit or tucked your stop up nice and easy. Really just a kind of a great setup here. You can see at this level, we have all our fast momentum components in place. We're above both of our VWAPs that we use. Volume is favoring this move fairly aggressively, in fact. And both of our time frames here are showing us that we have momentum. So this was really a well-navigated push higher for crude oil. So those are my thoughts on that particular market. That would have been the spot to enter. You can see we've also broke that prior high over here, retested it, this level, perfect. And you can see we've got an explosive move directly off this. If you were late to the party, you could have bought this retest here, but this was really the primal area to get involved in crude this morning to capture some of that rally. While we're talking commodities, we'll skip over here and take a look at gold. Two great spots here that I thought really made some decent sense. This morning, we broke through some of these overnight lows really, really nicely. Created this very short-term level. Let me zoom in so you can see it. Let me try to get that out of the way so it expands. There you go. So we create this short-term level here of indecision. We break that level, and right here, we retest it, okay? Right there. Bonk. That's the spot. Now, what do I have at the spot? I have rising selling volume. I have two time frame momentum. I have all my fast momentum here, my fast moving averages all in sync the way I want them. That nice, beautiful ribbon effect telling me that the momentum is very fluid. I'm below both of my VWAPs. You can see the market drops into 830 revised CPI reports. So really got a nice kind of drop out of this. I do not ever recommend holding a position through a news release. Okay, I just don't. Because more often than not, it's more uncomfortable than it is desirable. So, got a nice quick bump here to the bottom. Then gold gets kind of crappy, right? We kind of sit here and go pretty sideways. Well, we do develop some downward or continued downward momentum, and that comes in right here. Okay, we break the opening range, we come back and we retest the opening range. Not the biggest move, but fairly predictable. Okay, so right there, that's the test or retest, I should say, of the opening range after breaking it. We do have our fast moving averages in sync. We're well below both of our VWAPs. Multiple time frame confluence up here, and it looks pretty good. Now we do come back to retest here, but I don't like this current time frame modified MACD. Not a big fan of it. Okay, we do come back to retest here. Also, MACDs don't make me happy. So the two spots for gold to have captured some predictable momentum to the downside was right here before the news release, and then right here on a retest of the opening range perfectly into this level where we've basically made an informal double bottom and we've been kind of reversing off of. So that's the scoop on gold. Let's talk about the NASDAQ and the S&P. I don't think it matters which order, so we'll just kind of dive in. So here is the NASDAQ 100, right? We blew through 18,000 today. You could see pre-market kind of range bound here. These prior highs, prior lows. You could see tight price action, right? We're kind of struggling a lot here. Pull back. Here's that news release. We actually sell off into the opening bell, place a bottom, and then we start rallying from there. Where does it look good to me, right? Like that's the question. Where does it look good to me? I really like this area right here. And I'll explain why, right there. Okay. So I'm above both of my VWAPs. I have all my fast moving averages in sync. Both MACDs are doing what I want. So I have multiple time frame confluence up here. I have increasing and decreasing buying volume moving in sync with the price action. So we close above this prior high right here, and we retest it right there. That's the low risk entry, right? Buy at the retest, place your stop under the prior candle. Everything's in sync, our momentum's there. And I told my traders, I said, listen, 18,000 is going to play a psychological number here. Okay, so I would strongly recommend considering profit taking at 18,000. Okay? I think we're going to get some pushback. Okay, there was a lot of liquidity at 18,000, meaning a lot of probably profit taking was going to transpire, and that's exactly what happened. Right, like we actually broke back down through this level. So at 18,000, it was the opportunity to pay and protect yourself. Right? You had an opportunity to capture this move, the retest here at 72.5, all the way into 18,000. Right, so it was about what $27.50, something like that. So over 100 ticks, very predictable into 18,000. Okay, that's all you got to do. Right, you get 100 ticks on the Nasdaq, you had a really good day. Got a couple of contracts rolling, and you are happy as could be. Now we do this dance back and forth here, right? And then we pop out over here. I don't like this area because we're right into another level. We don't really retest this level very well. So this, to me, was the primal spot to consider trading the NASDAQ. The retest of this prior high after closing above and taking your profits at 18,000. Right? When we're working with psychological numbers, forget about the levels. Worry about the psychological numbers first and then the levels. So that was my thought process here. Buy the retest, take profit at 18,000. If we keep going higher, great. If we don't, we saw a bunch of liquidity at 18,000. I was concerned about this, and this is exactly what happened. We did, however, really kind of just close below and back right above this prior high where we found the initial support and then carry on. But you got 100 ticks here. Very predictable. Right? Why spend more time than you have to? All right, last but not least, the S&P 500. Okay, let's talk about it. Kind of crappy this morning. Same thing, right? Nothing there that makes me excited. Here is that 8:30 news release. Here's that sell-off, just like the NASDAQ, into the opening bell. And here's where we recover. We danced on this 50-30 level for a while, and there was a ton of liquidity here. So this was a little concerning to me because we were having a hard time getting through it. And if you notice, right at the same time that we were having a hard time getting through this level, we did come through it. We did consume the liquidity. In fact, new liquidity came below. But when the NASDAQ topped out at 18,000, so did the S&P right here. The reason I trade the NASDAQ and the S&P rather than incorporating the Dow or the Russell or any other combination of indices is because the NASDAQ and the S&P are most reactive to one another. So when I saw the S&P consume the liquidity at 50-30, it gave me the confidence to say there's a better than not chance that the NASDAQ tests 18,000 as long as we don't lose 50-30. Well, the NASDAQ tested 18,000 right here, right around here at the same time. And as the NASDAQ pulled back, so did the S&P. So this was not a very prime area when incorporating both markets into one another. But if you were just be patient, and that's where most of you suffer the hardest learned lesson, is that you will lack patience. And I'm sorry, I'm not trying to be mean. I've just helped traders for many years, and I understand that that's where the biggest struggle is. And I'm not going to lie. It was one of my biggest struggles to overcome, and a struggle that I still fight to this day. So here we go. We finally get back above this high that we failed at when we tested 18,000 on the NASDAQ, and we hold it, right? Right here. We close above it. We retest. We close above it again. I mean, right there, to me, ideal low-risk spot to try to partake in the S&P. Because all I'm doing is covering these couple candles here with a stop and going, all right, as long as we maintain this prior high as support, we could probably push higher. And push higher into where? Well, we had a very defined level overhead at 5040.25. So this prior high, retest entry at 5034, drove us into 5040.25. You can see right there, we ran out of steam, we fell back, we're currently retesting it right now. So if you ask me, in these four markets, these were the most ideal areas based on multiple time frame confluence to partake in all or any of these four markets that I've just shared with you. Now, listen, let me be perfectly honest with you. I do not sit here and I don't believe in telling you to buy or sell the market, okay? What I believe in is providing you with analysis and interpretation of what my experience tells me so that you as the trader can decide if you are ready to make an educated decision in either entering or staying out of the market, okay? I don't believe in buy and sell indicators. I don't believe in telling people what to do because that doesn't teach you anything, right? I am here. The name of my company is Special Analysis. What do I do? What does Anthony Special do? He analyzes and interprets the market. I tell you what I see, what I believe has happened, and what I believe is most likely to transpire. And I also tell you what I believe the risks associated with this setup or what my interpretation is come along with it. Anybody who tells you that this is a place to buy or sell and doesn't explain to you the risks associated with the opportunity to buy or sell the market is doing you a great disservice, because your number one job as a trader, number one, above all, is to manage your risk. So if you're following some guru or some this or some that or some coach, and they're not teaching you or interpreting the risk alongside or for you, then they are not focused on what your number one goal is. They're focused on selling you entertainment and excitement, all of which I do not believe in. So if you'd like to learn more, there's some links below this video. I encourage you to click on them, and I look forward to hearing from you.